The Fed suspense is finally over. Gold rallied following the dovish statement put out by the Fed. It's now back trying to find its place, and Jim Wyckoff joins us today. Jim, good to see you.
Hi, Daniela. Always nice to be with you.
So, Jim, let's start off with your thoughts to yesterday's Fed statement. As we know, gold rallied after the statement concluded. Was it a meaningful rally?
Daniela, I was reading the wires overnight, and I think I will repeat what an analyst said that pretty well sums up what happened yesterday regarding the Fed and the FOMC. Basically, the markets got caught wrong-footed. The marketplace was expecting maybe a bit more hawkish tone from the Fed. The Fed did remove the keyword patience from its text, but other indications were that economic weakness and such makes it less likely that the Fed will raise interest rates sooner as opposed to later. And like I said, I think the marketplace was a bit surprised by that initially. However, upon reflection here Thursday morning, I don't think much has changed fundamentally in the world marketplace, and the markets are realizing that. We're seeing the dollar index showing sharp gains. We've seen gold back off its highs. I guess the bottom line is the tenor of the gold market really hasn't changed much despite the pop higher we saw on Wednesday.
So, Jim, with everything going on in the market right now, how should you be handling gold? How should one be trading it?
Daniela, on a near-term technical basis, and that is very important, most professional, successful traders and investors do follow technical analysis. And technical analysis at present is bearish for both gold and silver. Both prices are in downtrends. The path of least resistance for prices on a near-term basis remains sideways to lower. However, on a longer-term basis and on a longer-term technical and cyclical basis, I am bullish both gold and silver. Markets experience periods of booms and busts, especially commodity markets. We are in a bust cycle right now in the precious metals, and busts turn into booms, and the boom is going to be right around the corner and likely sooner than most would expect.
And seeing how gold now is trying to find its way again, what's the buying interest like for gold? What are you seeing, Jim?
Well, we're seeing a bit of bargain hunting, maybe a bit of safe haven demand, but really the sellers have the upper hand right now with the strong U.S. dollar. Once the U.S. dollar index does start to turn lower and roll over, so to speak, from a technical basis, then I think you're going to see some more speculative buying pick up in the both gold and silver market.
All right. On that note, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, I'm giving April COMEX gold a Wyckoff market rating of 2. That's fully in the bearish camp. Prices are in a solid near-term downtrend. Overhead resistance on the chart is located at 1200. Solid technical support at this week's low of 1141 and change. Looking at May COMEX silver, we've got solid overhead resistance at 1650. Solid support at the recent low of 1526. Silver, I'm giving a Wyckoff market rating of 2.5.
Thanks so much, Jim. We'll see you next week.
Thank you, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We'll see you tomorrow with Gary Wagner and Chart This.